Hello class, and welcome to our fourth lecture series on managerial accounting, and I'm your instructor Jamal Haider. Okay, today we are starting a new chapter which is job order costing. So up till now what we have studied the different classification of cost based on some criteria, either based on decision, either based on based on behavior, either based on direct or indirect, right? So we just saw about different kind of, like manufacturing or non-manufacturing, this kind of stuff. So up till now, we have discussed the direct cost, like direct labor, the manufacturing cost, direct labor, direct material, and manufacturing overhead, right? In these three, direct material, direct labor is fairly evident. You don't have to memorize some kind of formula, because why? Why? Because these are easy to calculate, easily traceable. You can directly find out that you don't have to put a lot of efforts, different mathematical calculation, graphs, and all that. So you don't have to do that, right? It's fairly evident. Now things started a little bit difficult when you want to find out the cost of manufacturing overhead, because manufacturing overhead include both the material and labor, which you cannot allocate directly, which means indirect labor and indirect material is going to be added on manufacturing overhead. So it's really hard for sometimes, like I told you, how much thread is used on one piece of shirt. It's really hard to find out the measurement, and you don't know how much exactly, how many meters, how many how many kilometers in one big thread. It's really hard to find out. You can find out through different mathematical formulas, through different equations, but that is not convenient, not easily traceable. So in that case, you have some, if you want to find out the value of manufacturing overhead, in that case, you make some kind of assumptions. So how this factory, event, or how factory runs. So nowadays, like in our first lecture, when we saw the video, we saw that in that video, the professor was talking about many, kind of costing system, just-in-time system, right? This kind of stuff. So lean production, total quality management. So nowadays, the business environment has totally changed. Now, what happened in the factories? They receive order in advance, right? So the vendor, for example, Walmart, but the winter is coming. So now the Walmart, big, like Carrefour, now they give orders in advance to factories. Okay, you need to make sweaters, warm clothes, okay, this kind of like stuffed toys, or Christmas is coming, you need to make some very nice Christmas gifts and all this stuff. So they basically give orders in advance. And what is manufacturing cost? Direct or product cost? Direct labor, direct material, plus manufacturing overhead. So when the order is coming, it's not like only you receive the order. So big companies, they tender, or they find out quotation from at least 3 to 4 trusted partners, trusted suppliers, right? Okay, there is one company, company A, there's company B, and company C. Okay, both gets the the tender or some kind of quotation. Okay, we are giving you 1 million stuffed Christmas toys order. It's a huge order, right? So direct labor, direct material, everybody has their own calculations, right? Okay, we find out the stuffing, the threading, the cloth, the stitching cost, everybody knows that. But the things that give you the advantage, your manufacturing overhead. Some factories are big, their manufacturing overhead is really high. So they say that, okay, I'm going to give you 100, maybe 100 quotation of like $30 per 100 of like toys. The B said, okay, I'm going to give you 29. A said that I'm going to give you 25. So what do you think so? The Walmart gives order to C, B, or A? I told you these are trusted partners. It means their dynamics are same. Of course, the Walmart will give the order to company A. Now we know that, okay, every company has their own, it's easily available. The direct labor, the direct material is easily available. But how they calculating the part of manufacturing overhead? For example, 10 is the labor, 10 is the material, and 5 is the manufacturing overhead. So where this 5 came from? They didn't even receive the order, they just gave the quotation, that's it. But how they find out this 5? You following my point, Chandra, Christine, Sipade, David?
Yeah.
Right?
Yes.
It means they receive the order in advance and they give the quotation also in advance, which means all these figures are, okay, I think, estimated, right? All these figures are estimated. So what if when you receive the order and you make the goods, you deliver the goods, and then you find out that, okay, our estimation was wrong. It cost us 26. Sorry, this is the sale price they give. Also include their profit in their, okay, I think I made a little bit mistake. So this is their just cost. Okay, so the Walmart says that, okay, I'm going to give you 27. Who is going to make 27? So C is out. B says that, okay, we cannot have $2 profit because of our selling and blah blah other costs are high, so we are going to reject that one. So A accepted that one. So A said that we are having, B cannot also, B is 29. We cannot accept that, so A accepted that one. So sorry guys. A accepted and earning $2 profit, right? So what if at the end when they deliver the goods, they found out that their cost was 26. They planned that they would be earning $2 profit on every 100 pieces, but now they are receiving 1. So their plan is not according to the forecast or their estimation. Okay, what if their cost exceeds 25 and becomes 28? Now they are having $1 loss on every 100 pieces. The order is 1 million. So you multiply this with 10,000, answer would be that they are having to even $10,000 loss. So it means your estimation is wrong. And what if turned out to be your cost of producing those 1 million reduced to 20? Look at the profit. Profit jumps from $2 to 7. So you're following my points? It's not like that, okay, once the company made the product and now they are selling the products. Now the companies are becoming more digitalized. They are adopting different technologies to reduce their cost. And you won't find these kind of companies that they are making the products and saving it to go down and just waiting for customers to buy. For the big companies, big factories, they first receive the order, they give quotations, and then they start making out. And then at the end, they compare their cost with their estimations. So as an accountant, it's your job to find out the true value or to give the base. Okay, this 25 whether this is justifiable or not. Or what if, for example, B's accountant, they wrongly calculated 29. Their, for example, factory manager or a cost accountant, they made a mistake. Actually, their cost was 20. But due to something they couldn't, they use different formula or something, they couldn't estimate, their estimation was wrong, and their cost jumped to 29. So they missed that order that could have given them a huge profit. So you need to be very careful regarding that one. So now you understand the importance of this chapter, and
Yes.
this importance of this chapter can also be applicable to your own business as well. If you want to start your business, so you need to be very careful that, if I have my own factory, or what if I am importing this stuff, I'm having the order from, one of the importers, I am having my, import export business. So what, prices I should quote over there? Or if I'm making something, so what should be my cost so that I can satisfy the order and can have my profit as well, right? So that is just the introduction of this subject. So let's just dive into this one. So our first learning objective is distinguish between process costing and job order costing and identify companies that would use each costing method. Let's talk about this. So process costing, job order costing, the concept is the same, that you receive order in advance. So process costing is when a company is only making single unit, that's it. Then you see the utility bills, the supervisor salary, the watch guard salary, just divided by units. You can find out. You can average out everything. It's pretty good. But what if you are making different products that are not related products? You are making computer mouse. You are making cars. So can you spread those guard salary to the mouse? Because automobiles, security guards, their salary would be crazy, right? The money over there is heavily invested rather than the computer parts, mouse, you're making mouse or computer keyboards, right? So then you need to find out that, okay, what would be my specific cost related to that product? So in order to process costing, you are just producing, okay, one papers, that's it. For example, AA4, AA5, simple like papers, blank papers for printing, and that's it, right? So one product is basically indistinguishable from the other units of product. You're making the same product. The identical nature of each product enables assigning the same average cost per unit. We call this process costing. So examples like paper manufacturing company, refining aluminum, and Coca-Cola mixing and bottling beverages. They are mixing the same material